Video. And as always, if you're new to the channel, a sub would be appreciated as I do provide valuable content on a daily basis. And if you like the video, smash the like button for the YouTube algorithm and let me know down in the comments below exactly what it is that you would like for me to cover in my next video. Today we have the request from Emmanuel to take a look at the Gbpjpy. So that's exactly what we are going to do from a technical, fundamental, order flow and sentiment perspective. Not so much on the fundamental side because we're still making use of the data that was released last week for the last month for the GBP, where we had the 15 bps hike, and we obviously saw that momentum pull through for December for the GBP. So we can expect the GBP to get weaker in the short term as well, but we'll speak about that now. So looking at the technical data, we can see here from a monthly perspective, the market is currently testing very strong level of resistance. So there is a possibility for a pullback because we have that impulse. There's a possibility for a pullback, and if you look left, you'll see the market came into that range on the 1st of April, and the market had never broken out of that either up or down as well. Now here on the weekly time frame, what do we have? Now on the weekly time frame, you can see how the market printed this W formation. Now by definition, when the market prints a W formation, you expect to pull back to the neckline before the continuation. And if you take your Fibonacci from the low to the high to measure the impulse, you can see how the 0.50% is lining up perfectly with the structure that we have there. So we can definitely expect the market to pull back to the neckline of this W formation before continuing higher as well. So this pullback is expected. Yeah, on the daily time frame, what do we have? Now on the daily time frame, you can see how the market came in here and the market literally got stuck within this range. So the market came in here, entered this zone on the 5th of January, and there was no movement in the market for a good amount of days, and the market is still stuck within that range as well. But as retail traders looking for selling, for sales over here, the best way to approach the situation would be to wait for a clear break of this level of support, because when support gets broken, it then becomes resistance. And then on the retest, we can start looking for selling opportunities for the market to complete the W formation to the neckline. The market will also complete this M formation, which is considered a bearish pattern in the market, and the market will also complete this the break of support, turn the resistance. So there's enough confluence stacked in our favor. Now looking at the commitment of traders reports, what the big banks, hedge funds and institutions are doing in the market, and we can see a base of the last report, our hedge funds came in and they added plus 2.8k long positions, and now they came in and they closed minus 8,661 short or selling positions. And you can see here this report was released last week, and if you look at the year from the 3rd, you'll see how last week the GBP was quite bullish overall. So here on the 3rd, the week started and it was just aggressive buying. So the report that's getting released on Friday for this week would probably show some weakness in the GBP, where hedge funds could potentially be closing their selling positions, or sorry, their buying positions. Now on the GBP, now on the Japan yen, you can see how hedge funds also came in and they added plus 8,341 longs, but they also added another plus 17,501 shorts, and the overall short positions are over exceeding the long positions. And we could obviously see how that had impacted the yen over here, because we had this massive bull run, but I think it's now time for correction, because the market always corrects itself no matter where it runs to. So I think it's time for correction, and the best time to find a correction is when the market starts consolidating, because the market moves, it starts the liquidity, the consolidation phase. They call this the consolidation phase. The reason for that is you have people trading on the 15-minute time frame. So retail traders, they come in here, they start scalping the market, and that is the best time to actually grab the liquidity, because you can see here all of these wicks are from sellers, and these wicks here at the bottom are from the buyers there as well. Now the best way to approach the situation as a trader or as a professional trader would be for the market to provide you a good opportunity. Now the best way to do that is to wait for the market to break below this level first, then create this equal low. Then on the retest of the neckline, you can start looking for selling opportunities for the not only for the market to complete the W formation to the neckline as identified on the weekly time frame, but also for the market to complete the M formation as identified on the daily time frame there as well. Now looking at the sentiment data, now the sentiment data tells us what the retail traders are doing in the market. Now we can see how 87% of retail traders are selling and 13% of them are buying. So we could potentially see the market move up one more time just to grab that liquidity once again, uh, and then the market could start melting down from there as well. But like I always say, you have to be reactive and not predictive and learn to adapt to the ever-changing market environment. And also, if the market does break above this level, a clear break above that level, then we can start looking for buying opportunities as well. But according to the data that we have right now, it's all pointing to a sell. But if the market decides that it wants to go break, because one thing you guys must understand, that the news changes on a daily basis. You could go sleep tonight and you know, Japan could be struck by a tsunami or anything could happen. And if that happens, then you'll see something like this happen. Then the GBP will just get weaker because it will impact the economy. So always make sure that you move where the smart money does so that you can have the best probability set up in the market as well. Now guys, as always, thank you for taking out the time out of your busy day. I really appreciate it. And as always, have a beautiful day and cheers for years.